Okay, it is 11:31 and we're right at 200. We've been averaging about 220, so I'm sure the rest will join as we get started. Okay, welcome everyone to our third session, an update from our Division of Local Government Services, a group that needs no introduction. We have with us Melanie, the director, and Cindy. We all know Cindy, former GFOA board member and very active with the GFOA before going to the division. They're going to tell us what's new, all the exciting stuff going on up in Trenton. I'm particularly excited to hear about handling all our emergencies and all that fun stuff. But as a matter of shopkeeping, whatever. Remember the Q&A is to answer questions. If we have time at the end, we'll field some questions. I'm sure there'll be plenty of questions for these guys. And mainly for the benefit of our speakers, at some point towards the middle, there'll be an awkward interruption where we ask a polling question to make sure people are still awake, didn't leave their computer, whatever. So I'll pop on, you'll get something in your chat or we'll pop on, but we will interrupt you about halfway through. So here we go.
Well, thank you, Jerry. I guess I'll go start first and then Melanie will address her presentation afterwards. So good morning, everybody. A bit different from our normal formatting for presenting, but safety first. I think everyone is getting good at navigating through one or two of these various online meeting platforms. I have to say Zoom is not one of my norms, so please excuse me if I fumble a little bit or I'm a little bit nervous. I normally would present in live, so this is kind of my first presentation on doing something in this type of a format. So diving into the updates from the DLGS, I'm going to start off with what else? Drum roll. The FAST update. So I want to share with you what's going on with FAST and what we've seen in 2020 and then what's coming into the future. First, we're really happy to report that we received a lot of positive feedback in changing how the data is collected. From the previous direct data entry into the portal to the completion of the DLGS Excel workbooks. Users are completing both the annual financial statements and the municipal budget workbooks, found a much better experience when completing those documents. We're pleased that this change resulted in a more positive feedback from all of you. We saw minimum corrections that were needed to address the workbooks after they were released. And then when any corrections were discovered, we corrected them with a turnaround time, with the same day, and even sometimes within the same hour of being communicated to us. Users benefited from some of the useful tabs that transformed your budget data into a format that was used in presenting your budget to your team or even your governing body. Customer service improved drastically. The number of support calls are minimal in comparison to previous years working in FAST. Matt has done a tremendous job in ensuring your user experience is what it should be. The budget review at the division, outside the challenges we face with COVID, has returned to a new normal. We've included features built into the FAST platform that advise CFOs of who will be examining the budget and when the budget has been approved for adoption. The division doesn't look at this process as only a regulatory operation. It looks us to partner with our local governments units to provide assistance and support to achieve excellence, efficiency, and long-term fiscal stability in their operations. In doing so, it also provides efficient and effective tools for our programs that offer the state comprehensive network of available resources. Some of the items that we saw this year that would help achieve a better experience for everyone are the browser that you choose to run the FAST platform. Internet Explorer, the browser we've used for so many years, is no longer being supported come 2021. So Google Chrome, Safari, Edge, and Firefox are the supported and are the recommended browsers to use when navigating in the FAST platform. Before hitting the submit button to transmit the budget information to the division, ensure that your workbooks are completed with all the required data, such as your votes are recorded, your public hearing and your publication is properly accounted for. that the budget messages are all complete and all the FCOA codes are assigned to each of the revenue and appropriations, all along with their corresponding salary and wage and other expense designation. Remember to save a copy with the specified naming convention for both your own files and for submission to the division. This way you can refer to your introduced workbook for the next phase when completing your adopted version. When uploading to the FAST portal, be sure to navigate to the correct record. There are two, the introduced record and also the adopted record. Ensure that the document is attached by saving it to the notes and attachment and that you can see it there before finally navigating to the submit page in FAST. Additional supporting documents when submitting the budget to the division, ensure that for your introduced budgets that the hearing date is recorded in the FAST submit page. Your levy cap workbooks are completed and uploaded. Your special items and revenue, at a minimum, the introduced COLA ordinance, if applicable, along with your certified new construction report. And your introduced user-friendly budget, and any other budget-related documents needed for the review process. For your adopted budget, make sure that the adopted date is recorded in the FAST portal. The adopted user-friendly budget is also completed and uploaded. By the way, user-friendly budgets will be due for both introduced and adopted for the 2021 season. Your adopted COLA, if only your introduced was sent with your previous submission, and also, if applicable, your local exam resolutions and CFO certifications. And then also any amendments that are uploaded in your adopted record. I know you guys know all this, but reviewing this process in somewhat a new environment, so many of us, we are trying to reiterate these procedures to expedite the approval for adoption and the certification of each of our local units that require levy certifications to calculate your tax rates. So what's coming for next budget season? We're adding the ability to insert a secure electronic signatures to both the introduced and adopted budget workbooks prior to submission to the division. This is so that each chief financial officer, auditor, and clerk can sign and certify the documents in their appropriate areas. This will replace the previous email address that we asked to use in the signature lines. Also, we'll be adding the director's electronic signature accordingly for those budgets that are under review on sheet 1 of the adopted budget. For the introduced budget, you will continue to get an email and a status change for your approval to adopt generated from the FAST system. In addition, adding the director's electronic signature to the levy certification process that will go to the County Board of Taxations. We are also looking towards sending the county your certified copy of the budget electronically with the levy with your levy certification, eliminating your need to transmit that document to the county. We, of course, will notify you of all these changes when they take effect via an egg notice using our GovConnect system once they become part of this process. 2 weeks ago, we added the submission through FAST for our fire district budgets. Like municipalities, fire districts will use a standardized Excel workbook that is downloaded from the FAST portal, completed independently, and then uploaded and submitted for approval into the FAST portal. If anyone here in the audience prepares the fire district budget, we have sent out a local finance notice providing you guidance to that submission process. Additionally, we have posted both written and visual training guides on our website. Coming for the 2021 budget season, counties will begin to submit their budgets using the FAST portal. Like municipalities, you will download your Division of Local Governmental Service standardized Excel workbook, prepare the workbook, have the budget presented for approval from your Board of Chosen Freeholders, and then upload your approved introduced budget for division review and approval to adopt. Then once adopted by your board, you will again upload your adopted budget into the FAST portal. You will have two records for you will have two records for identification for both your introduced and your adopted records. And you will access the county budget portal, and workbook will be available prior to the end of this year. In review of this year's submissions of the required audit in FAST, we are still receiving paper copies from your auditors. We received almost 200 paper copies for the 2019 audit season. Auditors must submit audits using the FAST portal to be considered filed. They should no longer be sending us the paper hard copies. So please get in contact with your auditors and let them know that they do have to submit the audit in FAST to be considered it filed. They do not need to send paper copies. The audit submission in FAST is a two-step process similar to what has always been required. The first step is for the auditor or the CFO to enter the amounts for each balance sheet and the schedule of trust reserve amounts. The system will not transfer balances from the filed annual financial statements to the audit record. This was due to the separation of the direct data entry of the annual financial statements to using of the separate Excel workbook. The division felt that this was a trade-off considering the number of events that occurred during the direct entry process with the annual financial statement. The auditor is required to direct enter any findings and recommendations and identify any repeat findings by direct input to the FAST portal. Then the uploading of the complete audit and single audit, if applicable, in the PDF format. Additionally, the internal control questionnaire, the dog report, the court report, and the UCC report should be uploaded. Then before submission to the division, the auditor of record certifies that the balance sheet amounts and schedule of trust reserve amounts are correct and accurate according to the audit, and then submits the audit in FAST to the division. Once the auditor has completed that step, the second step is for the local governmental entity to then upload the resolution group affidavit form, proof of publication of the synopsis of the audit, and if necessary, complete a direct data input in FAST for the corrective action plan, if applicable, and then upload the resolution accordingly. The CFO then is required to submit their portion into the FAST for the audit procedures to be completed to the division. Both of these steps are required to consider the audit process complete in FAST. In the event that a particular document is not uploaded, the notes and attachment is always open for future uploads to the given year. It is essential for all of this to be complete when this information is needed for budget and levy certification. The next topic I figured I would talk about is not about FAST, is more in line with preparing for your audit and not compromising internal controls during this COVID situation. Considering all the modifications municipalities made due to COVID in order to keep social distancing guidelines in place, it's not surprising that some of the measures for internal controls may have been compromised. Not intentionally, of course, but by way of considering public health and your health more of a priority. Now that hopefully you've adjusted to your new normal work environment, here are some of the considerations that you should be prepared when orders are to complete your 2020 audits. I've been in contact with several auditors and they have provided the following suggestions. I'll break it out in some of the larger components and some of the most common internal control measures. None of this is limited to the specifics or that there's not more to be included in this list. We'll start off with the individuals in charge with specified tasks. Are your individuals doing these certain tasks that otherwise were separated because of an internal control? Are all the required signatures being obtained to provide authorization on the various different items that need authorization? Are faxes and emails being considered as authorizations where an actual signature may have been considered in the past? If you're considering using the faxes and the emails, are they being attached to the document that is being authorized or the condition that's being authorized? Is someone else completing the task now? Are those same internal controls being considered that were in place when someone else was doing that task being altered to ensure that that individual has those controls in place? Are there circumstances where management is overriding proper controls just to get the job done? We see a lot of that's happening in the current situation where you just need to get whatever that task is done, and management may be overriding or overriding those proper controls that the chief financial officer normally had in place before. The next topic is banking. Are you doing your bank reconciliations? Are you doing them monthly as you should be? Are they being performed timely and completely? Are they still being performed by the same person as before? Or has somebody else taken over that role? Considering the chief financial officer may be doing more because of staffing purposes or social distancing or altered schedules or whatever the situation was, by doing more work from home or whatever your altered schedule is there still a separation of duties in place where prior COVID that ensured the same person that authorizes payments are not performing those same reconciliations? Has any of those processes changed? If so, have you provided those proper internal controls to adapt to those procedures? Is double authentication still in place for doing wire transfers and other banking that requires this type of security? Are you reviewing your cybersecurity conditions and in order to make sure that the safety of the public funds are being protected? The third topic is handling of cash and the cash receipts. Is your 48-hour rule still being adhered to? Have bank runs for deposits been altered? Are you having cash or cash deposits sitting in a drawer waiting for that to be taken to the bank in time? Has any modifications been made to the collection of receipts? Is one person being designated for the collection of all department receipts? We have seen that that is happening. You know, if you have one person where normally your construction office was taking in receipts, your clerk was taking in receipts, your police department might have been taking in some receipts for records, or have you now modified that because of COVID, where one person is taking receipts for all departments? If so, were there provisions put in place to ensure that the accurate posting in your financial system is being performed? Are at risk for fraud departments such as tax office and utility collections being monitored to ensure that controls are in place to mitigate the potential of fraud? The next topic is payment of bills. Are any shortcuts being taken or alternate methods in place for the paying of vendors? Are all invoices and vouchers being properly executed? And is the bill list inclusive of all payments of claims and or bills being paid without governing body approval due to the public meetings not being held timely? If so, has any of this been modified in accordance to the procedures for your governing body's authorizations for the payment of claims? And the last one is payroll, 5. Is there a process for an independent review of the payroll before it goes out? We all know ensuring trust in staff because they do a good job just shouldn't circumvent the responsibility of that independent review prior to the payroll run being authorized. Ensuring that there is somebody else looking at the payroll before it is run, before checks are cut, before employees are being paid. We realize that during this health event, that changes to our regular day-to-day operations need to be made. However, understanding the role of your auditor to ensure that proper internal control procedures are in place to protect public funds. You should understand that the challenges they are faced with are ensuring your financial statements to satisfy fraud prevention. I'm certain they will be adding additional testing requirements with an increased number of items in the pool to ensure that they have met their independent review as required for your financial records. This and other things will help you protect you and move your auditor forward with what their challenges are in effect for the 2020 audit season. Well, this is all that I really have to report. Next up is Director Melanie Walter. She'll present some additional updates from the division. So Melanie, you take it away.
Thanks, Cindy. For everyone, I just want to thank our wonderful Assistant Director, Cynthia Lindsay. She's kicked off this session with such a great fast and audit update. She's really been in the weeds in this since the beginning of the pandemic, helping with guidance, documentation, and making sure that the FAST program continues to develop. It appears that before I begin to go into content, though, I'd like to do a poll to the audience, so I will start off now.
Melanie, before you start, there's also a question in the QEA that related to Cindy's presentation. Since there's only one question, we might as well field it.
Sure.
So, and we can do this while they're filling out the survey. So the question came over, can an AFS be completed without bank reconciliations? If municipality does not complete bank reconciliations monthly and auditors preparing best estimated AFS, which is different than budget figures, what is the DLGS office responsibilities towards compliance? Not really sure what that is asking, but
Well, I don't know that you can complete your sheets 9 of the annual financial statements without completing your bank reconciliations. Information that is communicated on those sheets are come from your reconciliating of your cash. If the municipality doesn't complete the bank reconciliations monthly and auditors are preparing your best estimates for your annual financial statements, I would guess that this would be an audit finding. And perhaps if you could not get your cash balances to complete your annual financial statements, that may also be a condition that your auditor may write on the annual financial statement when submitting it.
and one more popped up. Somebody's curious about the timing of FAST for local authorities.
So we plan to release fast submissions for local authorities in July of 2021. They're mostly fiscal, so they'll start entering them in the middle of the year or the starting of the fiscal year for 2021.
There's one more popped up, and this is going to be the last. We're moving on.
Okay.
With municipal swimming pools not open for 2020, how would you recommend putting our swimming pool budgets together for 2021, since we have no membership fees collected in 2020?
I'll let Melanie answer that.
Okay.
Maybe
We're actually
that.
going to cover that in this next section anyway.
Yeah, that might come up exactly.
Perfect.
Okay.
So then I'll dive into the content. For all of your information, I was nearly double booked today. So fortunately, the trip from the kitchen to the office was a little bit easier than Newark to Atlantic City. We were able to fit both of these in. So I wanted to thank Cindy for stepping in at the beginning of the presentation, just in case. And the material that she covered is also our key nuts and bolts. So I wanted to make sure that all of you heard it before you nodded off or switched over to Netflix. It is a pleasure to be back in front of the whole group this year. It's very different, obviously, from prior years, and we've seen and heard a lot more from each other in some ways during this year, despite all of these challenges, than we do in a typical budget cycle or year. Everyone's been working so hard to confront the COVID-19 crisis and to address the fiscal impacts that are resulting from it. And I'm glad that we're all talking more, and I hope that that trend continues. First, I'd like to give you a little bit of an overview of some of the things that we're seeing at the division relating to statewide local fiscal health. We have the advantage of some aggregate data that I think a lot of people don't see. So I'm going to give you a look back at things that we saw coming into 2020 and then how we've seen that change during this crisis. New Jersey municipalities entered 2020 from a position of great and increasing fiscal strength. Fortunately, this left them in a better condition than they might have been to deal with the fiscal effects of COVID-19. Although there's obviously still been manifest challenges. In 2019, the average municipal fiscal stress level had declined by 3% from 2018 to 2019, according to our internal metrics. 81% of the 411 municipalities that have a credit rating had a high grade rating of AA- or better with Standard & Poor's, or AA3 or better with Moody's. The typical municipality had a fund balance of approximately 21% of the budget. That was the state median, and which would put us well above the GFOA recommended minimum of 2 months of general fund expenditures, or the state monitoring minimum of 5%. The average municipal fund balance rose by 4.7% in 2019. 62% of municipalities actually increased their fund balance between 2018 and 2019. Over 2/3 of municipalities, so 68%, ended their fiscal year with more cash receipts than they did in the prior year. Additionally, the average net debt per capita dropped 13% from 2018 to 2019. 2/3 of municipalities saw a decrease in their net debt. and tax collection rates averaged 98%. That is a phenomenal position for the state kind of walking into this situation. But obviously then everything changed. The bond market froze on March 12th. And pretty much from then on, we saw that COVID was going to alter not just our operating environment, but our financial environment in numerous and really unpredictable ways. Although the nation is sharing in this public health crisis, there are few states that will see the impact that New Jersey already has and will endure. Market conditions, expanding unemployment, and business closures have led to revenue shortfalls that have burdened local units striving to meet these challenges. Combining that with substantial COVID-19 related expenditures in public safety over time, health services, self-insured health benefit outlays, and public works has heightened all of the budgetary and cash flow challenges that you face year to year. So even though you came in with a position of strength, we understand that things have been constrained. Everybody's been balancing the need to do something right now against the need to assess conditions, gather data, and avoid overreacting when we're not sure where we're headed. That's something that everyone in this room certainly faced, and doing that from an enduring isolation meant that a lot of our stressors were heightened. The results of everybody's efforts, though, have been very clear. Things have been tough, and we're not through it yet, but New Jersey municipalities are faring far better than we had feared might be the case when all of this began. In fact, we're faring far better than many of our peer states around the nation, in part because we have fewer sources of revenue that are subject to great variability, but also just the management efforts of everyone here. Our worst case models contemplated counties and municipalities realizing deficits of over 10%. We were tracking based on the 2008 to 2010 recession in some areas, and some places were actually higher. That outlook was very bleak. Fortunately, we're seeing actuals that have substantially outpaced what we anticipated the losses would be in terms of revenues coming in. Property tax collection was up statewide in May by about 0.4% and down less than 1.5% on average in August based on our survey results. We had a pretty robust survey response, and I want to thank the TCTA for that. I know a lot of the people who are part of that group are here. Also, it was interesting that although we did see reductions in August, the substantial drops, which we define as greater than 5% in any quarter, was only a handful. I mean, truly a handful. We're talking 6 or 8 municipalities in each of those quarters. Authority and utility revenues have been down across the board. Parking was hit particularly hard in many areas, and court and hotel revenues have obviously been abysmal. Overall, though, stability in the property taxes and some unexpected revenue increases related to sort of internal state tourism, things like increasing beach badges, have meant that a number of municipalities and counties are faring better than we had hoped for this year. Although the revenues themselves are a part of that, I just want to note that your efforts to manage through this crisis have been vital. The effort and ingenuity that government officials, employees, and professionals have shown deserves a great deal of credit for the stability that we're experiencing in what is otherwise an extremely difficult time. The past 6 months have been uniquely challenging for local government. We understand that, and we've been actively providing services, guidance, and support to assist in response and recovery efforts throughout this period. Early in the spring, as conditions started to really evolve, division leadership and staff aggregated advice and suggestions from across the whole state, and we developed the toolkit for operations and finance. As part of that toolkit, we've issued more than a dozen local finance notices and guidance documents to support local response and recovery efforts. We've also advocated for legislation to allow us to provide local units with deadline extensions, revenue calculation adjustments, and budgetary relief. I appreciate all of those who contributed to data gathering, development of guidance, and the larger legal, fiscal, and policy efforts. There was so much to be done, and so many people stepped up to do it. I first highlight division staff, including Tina Zapicki, Paul Ewert, Cindy, Pat McNamara, Jason Martucci, Matt Galello, Margie Saharic. I mean, everybody really lent a hand anytime that we needed something. And so many of you have worked with them over the years that I just wanted to make sure that you were aware of the effort that they put in, the overtime, the late night phone calls to get everything ready to go out to you. We've also appreciated all of the input that we've received from former division employees and directors. A lot of them have been on hand for us in the last few months to make sure that the things that are going out meet the needs of the communities that they serve. And I'd also like to thank the professionals, including the many who are here today. We've done calls with TCTA, with the League, with NJAC, with the Clerks Association, AEA, GFOA, the MMA, the Urban Mayors Association. Many of you have been on an awful lot of phone calls with us and with the governor's office. I know we have daily, weekly, and bi-weekly calls that continue through today. I also assembled some local working groups with mayors and business administrators to hash out some of the local issues we were struggling with. Those meetings were incredibly helpful for ensure that local voices were a part of state policy making. We tried to keep a representative sample of different towns at different times from around the state. And that's been incredibly useful for us. So for everybody who's participated and whose towns have participated in those calls, just a thank you. I thank the municipal officials, the officers and the employees who reached out and continue to communicate with me directly and to communicate with our division as a whole. I think all of our staff has appreciated that spirited conversation. And although not everybody in the room has been happy with every single result, we're all glad that we have a clear path forward at this time. The contributions of those who've worked with us and who've supported division efforts over these past months are immeasurable, and they won't be forgotten. Ultimately, I know most of you are probably here for this next portion of the talk, so these unprecedented circumstances have called for a new fiscal lifeline. And to meet this need, the governor and the legislature have adopted Public Law 2020, Chapter 74. This law empowers local governments to alleviate fiscal impacts that are related to COVID-19 emergencies through the measured use of existing budgetary and debt structures that have been reshaped to meet local unit needs. The approach combines budgetary relief, checks to ensure fiscal responsibility, and borrowing relief into a package that maintains the market integrity of New Jersey local units. This is especially important for local budgets that have narrow reserves or that are more reliant on non-property tax revenues, things like the hotel and motel tax. The measures in this law will help to assure immediate, practical, and comprehensive budgetary and tax relief for local units. Municipalities and counties that face substantial budget shortfalls now have the flexibility to spread what would be an unsustainable single-year impact over several years. By doing so, governing bodies can minimize taxpayer hardship, continue needed capital improvement projects, and preserve the essential services that are so critical at this time. The tools that are contained in this new law effectively are a crucial lifeline for towns that are going to have significant economic challenges due to COVID-19. As such, I'm also pleased to be able to report that the ratings agencies seem to be responding relatively favorably to this approach. Moody's issued a sector comment on September 8th that was entitled "Deficit Financing Will Be an Effective Tool for Municipalities Facing Revenue Loss from Coronavirus." It expressly emphasized that the restraint, the fiscal restraint, and the DLGS oversight that were built into this new law alleviated many of the usual concerns surrounding deficit financing, particularly things like unfettered and unnecessary long-term borrowing and the impacts that can have. Indeed, the report noted that while it has exacerbated rather than alleviated credit strain for some municipalities across the country in the past, this authorization is limited to covering coronavirus-related issues and comes with key restrictions and oversight. It is thus an effective short-term tactic that can help materially in avoiding the extreme austerity which might otherwise be necessary. I know all of you have dealt with these kinds of challenges in the past, and I just think that finding a solution that brought this level of approbation to a debt financing bill was a difficult needle to thread. So for all of you who've been a part of it, I'm glad to be able to report out that things are going well. I know a lot of you are asking how this works. Our local finance notice is slated for release this week. We're undergoing final review of the certification and the application. The local finance notice itself is complete. So you'll have full details in that document. Today, I'd like to give you an overview of the key provisions and how they will be implemented. First, the law allows me to promulgate some new standards for anticipation of COVID-affected revenues in the fiscal year 2021 budget and future budgets as necessary. For 2021 budgets, we're planning to authorize all local units to use a 3-year average for calculation of affected revenues. This will be accomplished using a methodology that's very similar to what you use for the RUT when you're experiencing an anomalous year. We also still have in place the ability to, on an individual basis for affected line items that you want to deviate from either the standard calculation or the 3-year average, you will be able to reach out to us to get individualized assistance. The law does also allow a municipality or county to authorize special emergency appropriations for costs incurred during the COVID-19 public health emergency. It's for anything that was used in the immediate preparation, response, recovery, and restoration of public services. Qualifying costs will include things like your PPE and sanitizing measures, public safety overtime, and other similar qualifying expenses. As with other statutorily permitted special emergency appropriations, those special emergencies for extraordinary COVID expenses will be financed by special emergency notes. Finally, and really the biggest piece of this, the law allows to qualify local units' COVID-19 related operating deficits as special emergencies that can be certified on application to the division and then spread over the several subsequent budgets as a deferred charge, rather than having to be budgeted fully in the current or next year. Qualifying operating deficits will include documented COVID-19 affected revenue loss or additional expenditures. You need only demonstrate the operational gap. So that's where you've seen a reduction in your prior year revenues from basically your 3-year average. It has to be related to COVID-19, and you're going to certify it on a line item basis. This applies to both general fund and utility budgets. You need only demonstrate that gap. You don't have to deplete surplus to qualify. We will be completing this process in advance of the close of the year by using an estimated certification filed with the division by December 1st. Then you will complete a reconciliation on your AFS to cancel any excess certified amounts. The reason we're taking this particular approach is because any certified deficit can be replaced by a deferred charge. So that will be entered as a revenue in the current year, and thereby you'll avoid the realization of a sheet 19 deficit in operations at the close of the year by completing the advance process, and you'll avoid generating surplus on the back end out of a deferred charge deficit effectively by completing the reconciliation to bring the result in each of those line items to 0. Any offsetting receipts from the federal government, the state, and other sources will have to be applied directly to fund that related special emergency. So if you get FEMA reimbursement, you will use that to take down the amount of your emergency. Once it's fully confirmed, certified, and you're moving ahead, the resulting deferred charge is raised over 5 years, but it's not raised in 2021. Instead, you make your first 1/5 installment in 2022, and each subsequent year through 2026. So the deficit has been realized in a line item in 2020. 2021, you've got your deferred charge on the books, but you don't have to raise it in your budget. 2022, the first installment appears. Should we have a recurring situation in 2021, sorry, the statute does allow us to yet again complete the same process so that those deferred charges would begin to be raised in 2023. That 1 year deferral carries throughout the implementation of the statute. Now, if your local unit is one that's going to experience substantial hardship from raising the funds during that time frame, you can apply to the local finance board to extend the deferred charge out up to 10 years, really effectively year 11 on the repayment period. The division has to act on any completed application within 45 days. This special emergency process affords a municipality or a county significant time to compensate for lost revenues and achieve recovery. It effectively authorizes a no-interest loan within your budget to absorb revenue losses, which potentially mitigates the need to borrow to fill these gaps, because if you have cash on hand, you can just raise it over time. However, if you determine you need to borrow to remedy cash flow challenges that are associated with the revenue deficit, despite the fact that the deferred charge is in place, you are still able to issue a special emergency note for a period that does not exceed the retirement of the deferred charge. So basically no later than year 6 or year 11. These notes can be issued individually, or you can issue them through a county improvement authority pool. Our local finance notice includes an appendix that will provide several sample scenarios and the appropriate counting treatment and journal entries for each scenario. Our certification and our local finance board application will be available on our website, and they'll be linked through the local finance notice so that you can just click right in and evaluate each of those scenarios. Now, I'm sure a number of you are already to tune out after all of that. This has been a little intensive so far, but please bear with us because there are a few additional and pertinent finance updates that I'd like to get through before we switch over for questions. First, as of yesterday, the 2020 Best Practices Inventory is live on the BPI portal. It's due November 3rd. Again this year, I thank the affiliate groups, including the GFOA, the MMA, and the League for their input and question development. The inventory will be hosted on the BPI platform that debuted last year. We've kept it a bit shorter. We're 60 total questions this year versus 84 last year. We've retained the 3-part format of core competencies, a best practices or effectively extra credit category, and the unscored survey portion. The minimum score required on this year's inventory is 80%, which equates to 16 of the 20 core competencies. We'd advise all municipalities to get a jump on this process this year, particularly because of the needs for these COVID certifications, which I know is going to be a challenge for finance offices everywhere. And because the help desk inquiries can only be answered by email on our end because our on-site staffing is reduced. So you may have people, you'll have to send in an email, and if we can't respond by email, we'll call you back. We'd also provide consolidated reopening guidance for local units. That's coming out this month. Because we hadn't mandated closures, we weren't actually originally planning to advise regarding reopening, but we've received a lot of requests through the governor's office and directly in the last month. So we've been vetting our guidance with the Attorney General's office, with the health department, through the CDC and the MELGIF documents, and then once it's ready, we'll release it. It should be out within the next week or so. I know a lot of you have been trying to get started on reopening processes. Emergency public meetings regulations have been finalized. They're appearing in the next state register. They've been submitted. It's about 4 to 6 weeks to cycle on to the next register. So we believe we're up at the start of October. Finally, actually a couple more, can't say finally yet. DLGS has also adopted emergency regulations that allow local governments and school districts to utilize online platforms for procuring goods, services, power supply, and contracts for public works projects. These emergency regulations are being concurrently proposed for permanent adoption. We were able to get the authorization for e-procurement for the emergency due to the crisis because so many of you were struggling to have in-person bid openings, and we were very aware of that concern. And fortunately, we got the authorization from the governor to proceed to issue those rules now. In the meantime, Executive Order 127 allows emergency rules that would otherwise expire during the current public health emergency to be extended until 90 days following the end of the public health emergency. Because of this EO, our local unit e-procurement rules, which would otherwise have statutorily expired on July 20th, can now remain in effect for at least 90 days past the end of the current public health emergency. That allows us to go through the full comment period with all of you and not have any break in services. Additionally, I want to make you aware, if you haven't already seen, we have a local finance notice up that bid thresholds have been adjusted. The state treasurer exercised her authority to adjust the bid thresholds for contracting units under the local public contracts law and the public school contracts law. This document is available on our website, but essentially the maximum bid threshold has been increased from 40 to 44,000 for contracting units that have a QPA and avail themselves of a higher bid threshold. A new local finance notice has also been issued regarding federal debarment and the consequences for public works contracts. There's some substantial rule changes, and so we'd advise you to take a look at it. Another matter that will be coming up in the near future is a local finance notice regarding the recent tax collection and tax appeal legislation. There's 2 key elements of this that you should be aware of. First, in the event that a taxpayer is successful in appealing an assessment, a new change in state law makes the interest rate calculation a bit more complex. Previously, the interest rate from the date of payment was 5% per year. The interest rate is now the lesser of either 5% per year or 1 percentage point above the Federal Reserve prime rate, as quoted by the Division of Taxation. Determining the applicable rate for each period is a key part of that guidance. Where the prime rate varies over the period where your tax appeal is pending, the municipality must apply the prime rates in effect while the appeal is pending, and that can vary. Second, the local finance notice addresses the conditions under which we can establish an extended property tax grace period during a declared emergency. For what period and who may benefit thereby. The maximum grace period extension is through the first of the next month following the original installment due date. It only applies to the first $10,000 due for the quarter though. Finally, municipalities availing themselves of an authorized grace period extension have to provide notice by regular mail or by any telephonic or email distribution system or reverse 911 that the community has available, and it must post notice on the municipal website. We're well aware that this one's a little clunky. We'll make it work and we'll get through it together. Can't win them all. Another upcoming guidance document will address various public works related issues, in particular guidance on public works contractor registration, prevailing wage, equal opportunity, and affirmative action requirements. I see our time is drawing to a close. Unfortunately, we're at the end of my list of updates. So thank you again to the GFOA for hosting the session and all of you for joining us for this annual update.
We have maybe a minute. There are a couple questions. Some of them can be answered quick, like this one here. In doing the 3-year average for the revenue, are we talking 17, 18, 19 or 18, 19, 20? So he wants to know.
Right now, we're anticipating 18, 19, and 20 for 2021 because we're expecting there to be continuing impacts. One of the great things about the way the legislation was drafted, however, is it does allow us to modify the guidance as necessary. So if going into the spring, we're seeing that things are fully recovered, we can adjust. And then as we go into 2022, we had significant concerns about 2020 and 2021 resulting in too low of an average for 2022. So we can address that when we get to 2022.
Okay. This one's an interesting question. If a municipality keeps doing the same mistakes in audit findings report every year, what will the DLGS, or I'm sorry, what is the DLGS office responsibilities to fix them? What kind of, I guess, what kind of enforcement are you going to do if the same audit comments keep popping up year after year after year?
You know, there are a number of statutory mechanisms under which we can intervene if there's a significant challenge in a local unit. These can include things like as minimal as requiring additional review, taking them off of local review so the state gets more engaged, all the way up to a Supervision Act provisions being applied or individual governing body members at $25 per day in their individual capacity. We typically strive to start with the lower end of an intervention and escalate only where necessary. Obviously, the objective is to help, and where you're seeing a recurring finding, typically that means that there's some kind of an underlying structural challenge. We work with some municipalities upon request to come in to help reconcile books and straighten things out. And we've also encouraged other municipalities to bring in professional financial improvement consultants to assist. If we can fix it at that level before escalating, that's always the goal.
Okay. Due to time, there's one more question and we'll cut it off. There are quite a few, but will similar, this is for the emergencies, will similar budget processes and borrowings be available to local authorities resulting from COVID revenue deficits as being allowed for municipalities and counties?
So at this time, the provision applies to municipalities, utilities, and enterprises. There are provisions in the statute that do apply directly to authorities. They are allowed to borrow for the COVID-related costs. That has not been authorized to date for the revenue losses. However, it is under discussion, and should you be seeing significant concerns, we'd encourage GFOA and the individual entities to reach out to look at whether we need to advise accordingly.
Okay. All right. Thank you very much. Always excellent presentation. Thank you.
Thank you.